right, let's get now into ESG and how to manage long-term risk and investor returns, particularly with private credit continuing its strong growth trajectory. Frank Hageali is director at Zagga and joins me now. Frank, great to see you. I also wanted to ask you about the fact that you have now backed the UN Principle of Responsible Investment. What's behind that?
Yeah, thank you. Nice to join you. Thanks for having us. We've always been an investor-first or investor-led approached business. And we set up our ESG committee a couple of years ago and looking at organisations around the world that can actually have similar type of views on ESG and how to implement that into our credit strategies and operations going forward. The PRI basically gives us the ability to sit with a community of global like-minded investing firms and who can actually take into ESG and all the responsible investment strategies going forward.
So ESG obviously is becoming more and more critical, and regulators are cracking down on how companies are dealing with this as well. How do you see it in terms of managing long-term risk?
Yeah, it's a good question. I mean, investors now, locally and globally, are looking at ways to make sure that, number one, there's sustainability, but also the ethics of that. So as a business, we look at ESG and say, well, is it just ticking a box, or is it actually going to be embedded in your strategies going forward? For us, in our risk management profile and process, ESG plays a really important role. And we know that high-level real estate itself, everything we do is underpinned by real estate. So real estate itself traditionally is a high carbon type of industry. If we can assist to reduce that carbon footprint and CO2 emissions, then we're gladly doing that. And how we do that is through our policies of looking at lending money to developers who have high energy efficiency buildings, for example, and have efficiency glass, and using sort of less water by having water saving devices. So we look at those things while we're assessing loans, and that's important to us going forward and not just ticking a box.
All right, so what other management risk criteria do you look at, particularly when it comes to real estate private credit?
Yeah, real estate now, and I'm not talking on behalf of the industry here, but in terms of Zagga, we look at industry now and look at real estate and say, well, there's a huge housing shortage, as everyone knows. In particular, it's all around the country, but in particular in the state. So, if we're doing our little bit to finance loans to developers who are looking to try and assist with bringing that shortage to a head or bringing supply into the market, we're happy to do that.
When you look more broadly at the overall economic environment, how do you sort of evaluate some investment opportunities given what you've just discussed and given where we sit in an uncertain geopolitical environment?
Yeah, good question. I mean, our investors mainly, and that goes from larger institutions to the mum and dads or the high net wealth individuals, we look at a balanced portfolio. So, not every investor gives all their money to a certain sector in the economy, and as you mentioned, there's geopolitical issues and quite a few other things too. But we look at ourselves as a provider of safe, stable returns, long-term returns to our investors, and the way we do that is investing into loans that have, in particular, a deep market. So we spoke about real estate earlier. There's a huge housing shortage. If our loans are underpinned by real estate, we see that as a resilient, safe bet, because we do have that pent-up demand from the last 5 or 10 years that will take up that supply as it comes onto the market.
So how do investors then get involved and take advantage in a pro-risk on environment too?
So we've got 8 years of track record, and we provide those stable returns. And I know, again, I'm not talking on behalf of the industry here or any of our peers, but from our perspective, we do look at those deep markets, we do look at the resilience, we do look at sponsors and how we can provide the investors with that safety of consistent returns that are not correlated with share markets, for example, and equity markets.
Let's also just talk there, because you talked about the supply shortage and I was talking about home prices with my previous guest. Do you think that we are going to meet demand? Certainly probably not by the time that the government wants to achieve this, but for the foreseeable future in terms of housing security?
Yeah. Again, we've heard some government commentators over the last few days, in particular planning ministers, housing ministers, saying that they've used the word challenge. I guess you could take that as you will, but not meeting the numbers or requirements, I think, is a real possibility now. So how do you do that? Well, you pent up demand from people who want to buy housing, then you've got government also providing guarantees for first homeowners. So that's a big challenge, it really is. And I think that's going to be a challenge going forward. I think there'll be a shortage going forward.
Do you think the government's done the right thing by lowering the deposit rate, or are they creating further problems?
Yeah, I mean, my personal opinion is it will lead to increase in prices, in particular for that band. I'm talking for Sydney here now, where they allow up to $1.5 million house values as part of his program, where it's not income tested, which is interesting. So my personal view is that it won't lead to anything other than a bit more price hike in those properties under $1.5 million.